Hello and welcome to this video on Ethereum. None of the content financial advice. This is ETH price versus its own time weighted average price analysis. This chart over here available on cryptoweeklies.com, link on the bottom of your screen, analyzes and compares the price of ETH versus its time weighted average price, which is this line in blue. And the color codes are assigned based on the risk levels, based on how far the price has deflected from the time weighted average price. Again, it's a filterable legend, and these risk levels are compiled based on the distance between the price and time weighted average price. Typically, in a euphoria phases of the bull market, the risk levels are elevated, highly elevated. Anything above points, anything above risk level 6 is considered elevated per this analysis. You can see the last bull run, the risk at which ETH kind of peaked was at around zero point 0.8, that 80% risk level at that point. Now that price action has come down quite a bit, where the current price action is for ETH at around $2,000, roughly speaking, $2,000, $2,100. It came really close a couple of days ago when the price was at around $1,800, and the uh, time weighted average price was very close to it at around $1,700. Now the price has gone back to $2,100. The time weighted average price is at around $1,700 as of today. The risk level is 3, that means it's the third best time to DCA per this model, and there is a difference of 23% between the price and the time weighted average price. Ideally, in the bear market for ETH, during the bottoming phase, the difference is negative. So, for example, in June 2022, when ETH bottomed for that market cycle, there was a difference of about negative 10%. Even in April 2025, there was a difference at the bottom at around 4%, negative 4%. That means the price was 4% lower than the time weighted average price. But this time around, again, if there is further downside, and as the time weighted average price is a growing function, in if the remainder of 2026, first quarter of 2026 is bearish, then price of ETH has much further to fall. This is just one of the models to identify where the price of ETH could go. The second model that we'll be discussing, again, going back to the homepage, this is the homepage of my website, cryptoweeklies.com. All of the charts again available to all. Starting with the regression based model, we'll start with the daily level of that regression based model. This is the regression based journey of the fair value of ETH. Typically, this regression based line over here, which is at around $4,000, tries to look for what is a fair value of ETH in a non passionate or dispassionate manner, where if, let's say, from cycle to cycle, if ETH were to grow and make new all-time highs like it did, even in 2025, the all-time high for ETH was slightly higher than that in 2021, only marginally so. So what could happen in 2025 if the risk levels were to come down now after that um, a brief journey back to the upside from the fair value? Typically, the current risk level is at around 0.22. If it were to go back to, let's say, looking forward to this level between zero point 0.1 and 0.15, the price of ETH could bottom somewhere between $1,500 and $2,200. Right now, the price is lower than $2,200. So that's just a future projection. As low, again, price could always go to zero. That's always possible. That's why zero risk level for ETH is at $0. The 5% risk is at around $752. The time weighted average price risk has is only 23% away from the current price. The 20-week simple moving average price risk, in terms of the price versus 20-week simple moving average price, again, as the price is not only less than the 20-week but also less than the 200-week and the 300-week simple moving average, and also the monthly candles are pointing to price action which is closer to the April 2025 lows for ETH, at least at the candle body level. Most of the indicators right now are signaling some sort of an accumulation trend again, or accumulation zone over here, at least in the short term. This can be better explained by the SMA or risk triad that we have: the top detector, the bottom detector, and the composite average, based on the price versus 20-week simple moving average. The default is for Bitcoin, but this is again also available for ETH. This is ETH price color coded with respect to the 20-week simple moving average price risk. This is split 80-20 in favor of proportional risk versus linear risk. This helps identify the topping pattern in a euphoria phase of a bull run, where the price action kind of goes to the upper levels of the risk level, like it did back in January 2021, even in June 2019 when ETH started peaking, even in May 2021, and also in 2025 August when ETH went to 5k level. This level tries to formulate this analysis over here tries to formulate the risk levels, the cyan colored risk level when it's in higher risk between zero point 0.8 and 1 risk, like it was in June 2025 till August 2025. This typically leads a major rally for ETH. Right now, the ETH rally or ETH risk per the leading indicator is at 1.15. This is the bottoming indicator, the second indicator over here for ETH. And ETH's price over here, ETH and ETH risk says that ETH accumulation risk is at around 12%. It has gone down quite a bit, but it's not as low as it was back in April 2025, or even in August 2024, or the June 2022 bottom, when the risk levels at the bottom were in this purple shaded region, and the risk level in raw numbers was at around 2%, between 2% and 3%. We did see a similar risk profile for ETH in April 2025, as well as in September 2024, and there was a massive rally following that. So that still hasn't happened. So the bottom indicator for the trailing Z score is not yet achieved for ETH. Coming to the ETH composite risk as an average of all of the individual um, the two models, the leading for top detector and the bottom detector composite together forms this risk based analysis of what the ETH risk could be. At this point, it's not in the lowest risk regimen, it's still in at around somewhere between zero point 0.1 and zero point 0.2 risk. If you were to overlay this with respect to the secondary y-axis, you would see that the ETH risk of accumulation is at around 14% or 0.14. At the bottoms, it typically bottoms out somewhere close to that 3% risk, or even in the market cycle bottom of 2022 June, it bottom risk level was at around less than 1%. So typically, if we were to draw a straight line over here at around 4 to 5%, 4 to 5% risk levels, or 0.04 on the risk level risk score, that typically signals a decent confluence among several models on on with respect to the accumulation zone. So time weighted average price model says yes, accumulation is near. The DCA model says that the price is at around 0.22 risk with some further downside. The SMA model, the 20-week simple moving average price model, says it's in an accumulation phase. The regression model, in terms of the undervaluation zone, the price has entered this green level over here, this green line, which is one standard deviation residual to the downside. What I would imagine this time around, in the depths of the bear market of 2026, sometime in future to be decided, price action likely visiting the bottom green line. Right now that level is at around $1,000, but if you were to extrapolate it in 3 to 6 months out into the future, it could be somewhere close to the midpoint of these 1,000 and 2,000, roughly speaking, at around $1,500 for ETH. So that's one possibility. The machine learning based price analysis, this is in-house machine learning model trained on weekly price of ETH since 2017. So about 8 to 9 years worth of data, says that in this in this bear market, if there is a continued 3 to 4 months of downturn, so starting February, now March, April, and early May, till early May, if the price action were to have a bearish bias, then the price of ETH could bottom at around $1,300. That's the one at a weekly average level. That's the one standard deviation non-panic bear case for ETH. All in all, the estimated bear market bottom for ETH is somewhere between $1,800 to $1,400. That's because the time weighted average price for ETH is at around $1,800, and this individual risk based model kind of weighted risk is pulled ahead only by the time weighted average price risk. The rest two risks, the regression risk and the SMA risk, are cooled off, but not the time weighted average price risk. So even for Bitcoin right now, price action is well above the time weighted average price. Similarly for ETH as well. So that's the estimated bear market bottom. In case of a bull market return for ETH, this model says that come next bull market timeline to be decided in 2028 2029, if there is a decent alt season with along with that bull market, and the base peak forecasted for ETH is at around in that environment is roughly 4x 4.5x of the current price at around 10k. The 4x on this or 5x on this market cap as well gets the market cap close to a trillion. The estimated bull case is at around, this is the base case, the bull case at 1200, and the moon case or stretch case at around 16,000. So which is roughly 4.8x, 6x, and 8x of the current price. That's what is forecasted by these models if we get a decent alt season next time around. With that, I'd like to conclude first by saying ETH, several models are saying ETH has gone to the bottom of the accumulation zone, especially the time weighted average price model and the DCA model, as well as the SMA model. But there is still further downside for ETH per the regression models, and also the machine learning based price forecast, as well as the estimated bear market bottoms at around $1,400 to $1,500. With that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.